Hey guys, this is Simon with Trade and Perform Coaching, and in working with some of my coaching clients, one of the things I noticed is that some people don't. I wanted to highlight a good way to go through doing homework, right, and figuring out how to read price action. And the objective is to do this without being able to read support and resistance zones, right? And it's an important skill because trading, even if you have pre-planned support resistance areas, requires the ability to read the price action that's actually in front of you. So we have two tools here. We have the New York Stock Exchange overall tick, and we have 5-minute price action bars, right? And so we're going to try to do this in a little bit of a vacuum because we do not have support resistance zones, and we don't have context, and we don't have speed, right? But we do have bar by bar action. So we're coming into the day, and this is our first bar of the day, right? And so what we do have is we can tell where the prior, here, let's get this back. We can tell where the prior day's high and low is, right? And so there's some things that I generally want to see. I want to see, can we break above the prior day's low, and can we break above the prior day's high? And what kind of day did we have the day before? Now, that day that we're looking at right there, and before I move any further, quickly, please, this is for educational purposes only. I am not a registered investment advisor. I'm just a coach who tries to help traders improve their performance by first helping them stop losing money, right? And then secondly, hopefully giving them teaching them the setups that will help them make money consistently, right? So in my thought process, when I look at this day, the first thing I'm going to see is balance. Balance usually means the market's building energy. I want to know if we're trading above or below because when I see a market that looks like what we're looking at right there, I expect to move higher or lower. And what we're going to do is go back and look at the last 7 days. So when I come in the first day, this bar, right, this bar tells me nothing. We haven't broken below the low, we haven't broken a swing high or swing low, right? And tick opened positive 400. Not negative, not positive, not anything. There's nothing for me to do, right? And as I scan through here, I'm looking for a change in character. And the first thing that's going to come up is I'm going to notice, hey, we just closed below prior day's low, right? Now, tick isn't overly negative, but we have broken below prior day's low, and I'm starting to think, hey, that could be the break to the downside after building all this energy. So what am I going to want to see after that bar? Well, I'm going to want to see if the next bar moves lower, and if we expand the range, right? I want, if you look at Paul Tudor Jones, the first thing he says is when he figured out that the market was going to crash, as he said in the first hour, there's a significant expansion of range. Now, I don't think the market's going to crash, and I'm actually relatively bullish. But that being said, I want to see that there's a change in character because my objective is, I have a simple objective: pull 2 points out of the market every day and put it in my pocket. I know that I can build an account if I increase my trade size as I move along, and that's what I try to teach my coaching clients. So this tells me right here, right, hey, I really don't want to be bullish at this point unless I get above 23.58, or there's a second part, if I stretch down 10, 15, or 20 points, because ES tends to act in an elastic, stretch the rubber band concept too far. So I look at my next bar, I'm going bar by bar. Now realize, do I have a reason to just simply go long down here? I don't. There's been no stretch, right? What I want to see is if we can close back in. If we close back in, my guess is that we'll push back to the other end of the range. But if we don't, my guess would be continuation. And based on this bar, if I'm uber aggressive, I'm just going to short the backside test here, right? So I start to get a push back up, right? And you'll notice that it can't close back into the range. It can't close back into prior day's low. And sure enough, we start rolling to the downside. Now, this is my high right here, 23.61. So immediately I'm going to come down to 23.41 and start looking for potential reversal areas. Notice my tick hasn't gotten too awfully negative in this part here. And this is the first hour. We've broken the first hour low. And I'm going to start to note my swing highs, right? I like to see us, as I go through the day, I'd like to see for a reversal to get above the last swing high. So if I'm uber aggressive, I'm looking for tick divergence in 10 and 15 and 20 point stretches. If I'm less aggressive, I'm looking for what I refer to as impulse move, meaning a change in character, a push up, and preferably a break in the last swing high. So watch as this day kind of continues through here, and we're starting to approach this 10 points down, right? And as we approach that 10 points down, we don't quite get there. This is the high. Not yet, right? Notice that now this kind of becomes a pseudo swing high. Why? Because it held here for 5, 10, 15, 20 minutes. I want to see if we can get above here, right? This is really there was actually rotation here. There was no rotation here. But again, we have to be a little flexible because we're talking about an intraday basis, right? So let's see where the market goes. We push down, and notice as soon as we get 10 points down, see how we start developing these wicks here? And look at the tick. The NYSE tick, what this tells me is that issues on the New York Stock Exchange, fewer issues hit lows when the S&P 500 index hit lows. That tells me there's divergence. And I am looking, if I'm very aggressive, I'm looking for a long starting here. Right now, there's two ways for me to do that. I can either see that, can we get back above this 2347, let's call it, and then look for a retrace. Or if I'm very aggressive and I can handle the P&L losses, I'm going to get long at 2340. It depends on my trade plan, and only you can determine how aggressive a trader you are, right? Do you just buy outright lows and try to catch the pops? That picture is very aggressive. Or do you wait to see some evidence that there's buyers and then wait for them to retrace and come back to you so that you can catch the direction of what is hopefully the new trend, right? And then the last piece you'll also see is that it becomes relatively easy to draw a downtrend line through this process, right? Let's see if I can get to it. Here we are. And you can see our angle of attack is starting to get a little bit sharper here, right? The sharper the angle of attack, the more likely you are, A, you want to see it broken, but B, that you're getting closer and closer to exhaustion, right? So as we're moving through, if I'm aggressive, I just went long right here at 2340, okay? If I'm a little less aggressive, I'm going to wait till this swing high gets broken. So we see these next bars that we've already popped off. Now realize, in looking for this tick divergence, right, I've already attained my goal. If I went long at 2341, which was 10 points, 20 points down, right, was 20 points down from 2361 to 2341. I already know that's a big stretch. I know that I had tick divergence. Notice, I want to point something out. Notice that when we got to 2351, see this right here? Right? See how there's no green bars showing up here? When we get to 2341, not a single one, right? See how when we're right in here? There's not a single green bar. And as we're hitting the lows, I want to show you right here, right? We come to 2351 right here. That's the low. And when we get to that low, we hit a new low tick of the day, right? There's no actual true divergence at that low. So again, I'm looking for little clues that are going to tell me there's a reversal, right? So when we finally come into the low, there's a clear, right? When we get to this low here, there's a clear new low, right? You see the negative 800 tick. We finally get 20 down. We get clear tick divergence, and then I get my first little green bar. Now, I'll discuss this in another video, but this is important because I want to see that there's evidence of buyers. And now, again, where I marked off earlier, I want to see if we can get above 2350 now. Watch as we trade. We get to that 2350. We hold, we hold, we hold, we hold, right? Nothing's happened yet. We start to pull back. Now, now see that bar right there? Now we've broken the last swing high. That tells me two things. First of all, if I took my tick divergence at the low, I've already got my 2 points in the bag, and hopefully I have a trailer running because we had stretched down 20 points. But now that we've broken this last, we broke this, actually, let me take a step back. I'm tired a little bit. We broke this swing high here, right? So see when, let me draw this line so everyone can see it. I apologize. We broke the swing high. See how we held above that last swing, and we held above significantly. So now the push back down, I'm hoping that we can get halfway back down for a long, right? But I'm already, as soon as we get here, I've shifted hats. We've broken the downtrend line, and we've broken, notice, not just one downtrend line at that point, but both the more aggressive one and the least aggressive one, right? We've broken both of them. Notice that we can't get back to even backside test that. Tick is starting to improve all the way through here. Notice when we push down, we get a big push down and tick, right? That tells you that there's a lot of selling on the broader market, but there wasn't very much selling in the S&P 500, right? Now we're above again. I'm definitely bullish. I'm hoping for a push back down, right? Watch how this day goes through. It never gives you an end. We're already at 1 o'clock, right? If we push back down, we're likely to get responsive buyers, and it just never gives us that response back in. So notice a couple of things. Without going into technical details, there were ways using my using the indicators that I have in the room of getting long in this area, right? But even without that, I could have just simply hoped to get a backside test right into this location right here. See how they got below, trapped back above. They couldn't quite get back, but that 23.45 became important. This became my aggressive entry. These became my less aggressive entries. Why? Because I had evidence that buyers were willing to step in at this point. And you'll also notice that we had the biggest series of up bars through here. And unless they broke that low at 23.40, I would expect a response back up. And notice you still had, even from this location, a rotation, the ability to get from 23.45 up to 23.55. So using that as an example, it's a great example of how you can be either very, very aggressive or a little less aggressive, but either way you could use price action, right, to tell whether they were going to push up or push down, and you could combine the stretch of the market to help you get an idea of where buyers and sellers might get exhausted. And those are characteristics that are unique to ES. Right now, I want to show you something here pretty sneaky, right? What I would normally guess is that if we could punch back into this low, back to the scene of the crime, and we don't reject from this area, meaning we punch above 23.58, that we should shoot up. So let's see what happens when that does that, right? So we're going to sneak to the right, right? And notice it's going to poke its head above, or it should, right? So we're going to come right over. And notice as soon as we poke our head above, which it did in the overnight, what do? We shoot right up to the upside. Isn't that cool? You know exactly, right? And not only that, but that backside of that 23.58 should now become support. Now notice, it should become support, right? Notice that when it breaks support, right? Watch when it comes back up to the backside again. Now it becomes resistance. See that? That should have gotten a response. Markets have memories, and they come back over. So we're looking for key areas. Notice we trap back above, right? Back below. We should make it one more time here. Back above. We do right there. Wow, we never got back above. If we pop back above and make an impulse move above 23.58, that should push us to 23.75. We never quite got there, right? They attempted to, and they rejected out of it. Notice that all of that came, right? That 23.58 being significant resistance, all came from this balance area, right? This break of that balance area, we got a retest of that area multiple times, and once they got back above, so I want to take this one step further so everyone understands. Besides doing the analysis of how to figure out how it was going to reverse intraday, right? Once this got underneath, right, think about, and I'm going to close with this, think about what's happening here. Every time we're getting up here, someone is going, hey, we broke balance. We should push lower. This generates people to sell, right? They're thinking, hey, this is the first leg down. There's going to be a second leg down. This is important in the thought process. When we close back in here, all these people, this entire block of sellers that were here, right, who were betting that the market was going to continue lower, right, now had to contend with the fact that we were no longer lower, immediately were squeezed back up, right back to the top of the range, right? Now notice, time frame is important, right? If they could wait it out, we eventually got back below. And isn't it interesting? As soon as we get below that 23.58 again, the same sellers show back up, and they repeat that process again. Short, 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 right? Short. Notice that what's generating this short squeeze over here is that it's not just poking its head above, it's gapping significantly, and they're having to make a decision immediately. Here they can kind of go, oh, well, we'll kind of wait. It's only a point or two above. It's only a point or two above, and we're cool, right? But over here, they don't have a choice, right? It didn't even make an attempt for half gap. They've been working really hard to keep the market down through here, right? And this was a total failure. And also what happened here was once we exhausted these shorts, right back down, back underneath that 23.58 balance area, and it became resistance again. And I think for me, that's the cool part of trading, is that traders leave signatures. If you can figure out what their signatures are, and those signatures are revealed by higher lows, higher highs, key area balance areas that get broken, right? And they become resistance areas on pushes up, and then traps back in, force their hand. And if you understand how those people think, you can make a ton of money in the market, because you'll understand how they're going to have to behave, and you'll notice the behavior repeats over and over and over. Higher lows, higher highs. Once those get broken and we're trending down, retraces become viable. Once we break lower, retraces back up, becomes shortable, right? So anyways, this is Simon. This is how I do my basic price action reading for the market intraday, right? So I want to repeat the process. Stretch, tick divergence, key rotation size, right? Following a trade plan, using my journal, right? And understanding the basics of price action as it occurs through the course of the day, right? I want to see if swing lows get broken, do they hold? If swing highs get broken, do they hold? And are we making a series of higher lows or higher highs? And what type of behavior characterizes a change in character in the market? So anyways, have a good night, guys. My name is Simon. If you need help with your trading, feel free to reach out. You are welcome to come and join us in the room as my guest. 5 days free of charge. Just email me at tradeandperform@gmail.com. And if you are in need of help, the one thing I can say to anybody who's trading, if you're losing money consistently day in, day out, stop. If you cannot paper trade profitably, you cannot real money trade profitably, right? But there's an important flip side to that. Just because you can paper trade profitably does not mean you can real money trade profitably. But if you can't paper trade profitably, you cannot real money trade profitably. You work hard for your money. Save it. Learn the process. There's a process here, and all you need to do is be able to find your key locations to give you 2 points a day and walk away. And if you can do that and you understand the power of increasing trade size as you increase profits, there's an enormous amount of money to be had. Anyways, have a great night, guys. I will talk to y'all, well, I'll probably post another video sometime next week. So otherwise, I'll see all the members in the room. Look forward to having another great week next week. Good night.